Breaking news. Nissan has just detonated a pricing bomb that's shaking the entire U.S. auto industry to its core. We're talking jaw-dropping discounts, deep price cuts, and unheard-of deals that have customers rushing to dealerships and competitors scrambling for answers. Nissan isn't just trimming prices, they're slashing them. In some regions, models like the Rogue, Altima, and even the Titan are seeing markdowns of thousands of dollars below MSRP. We're seeing lease deals that feel like giveaways and financing offers that haven't been this generous since the recession era. Something big is happening here, and it's not just a clearance sale. It's a calculated move with massive industry consequences. So what triggered this sudden discount war? According to insiders, Nissan is sitting on a huge surplus of unsold inventory. Their dealerships are overflowing, and the 2025 models are already en route. Combine that with slowing consumer demand, high interest rates, and economic uncertainty, and you've got the perfect storm for a pricing collapse. Nissan knew they couldn't wait any longer. Instead of watching sales crawl, they pulled the pin and dropped the discount bomb. But here's the twist. Nissan's move isn't just about clearing stock. It's a strategic attack on rivals like Toyota, Honda, Ford, and Hyundai. They're aiming to flood the market with affordable vehicles, undercut competitors on every front, and grab as much market share as possible while everyone else is still figuring out their next move. And it's working. Analysts are reporting a massive uptick in dealer traffic. Online searches for Nissan vehicles have skyrocketed overnight, and even used car markets are feeling the ripple effects. The price drops are already causing chaos for other automakers. Dealers for competing brands are calling emergency meetings. Inventory managers are panicking as buyers cancel reservations and flock to Nissan lots. Toyota and Honda are reportedly considering their own counter-discount campaigns, but no one's made a move yet. If they do, we could see a full-scale price war erupting across the auto industry in the coming weeks. But for buyers, this is a golden window. If you've been holding off on a new car, especially a mid-size SUV or sedan, Nissan just made it hard to say no. The numbers are almost too good to believe. In some states, Altimas are being offered with over $5,000 off sticker price, 0% APR for up to 60 months, and bonus cash incentives stacked on top of dealer markdowns. Some dealers are even throwing in extended warranties or maintenance packages just to move inventory faster. And it's not just the regular models. Nissan is cutting prices across their EV lineup too. The Ariya, which struggled to compete with the Tesla Model Y and Hyundai Ioniq 5, is now being aggressively priced to lure in electric-curious buyers. With the federal EV tax credit and Nissan's new dealer incentives combined, some buyers are walking away with up to $12,000 in total savings. That changes everything. For consumers on the fence about going electric, this might be the push they needed. The timing of this discount campaign is no coincidence either. With inflation still weighing heavily on household budgets and auto loan delinquencies creeping upward, Nissan is betting that affordability is the ultimate weapon. While other brands keep pushing luxury trims and high-tech add-ons, Nissan is repositioning itself as the king of value. And that might be exactly what American buyers are looking for right now. Industry experts say this could mark the start of a major shift. If Nissan's gamble pays off, it could force the hand of every other automaker operating in the U.S. The days of $700 car payments and inflated MSRPs may finally be numbered. The entire pricing structure of the auto industry could get a hard reset, led by one bold move from Nissan. And there's another layer to all this. Nissan's decision comes just weeks after their internal financials revealed struggling profits in the U.S. market. The Japanese giant has been losing ground to Hyundai, Kia, and even some American brands. This aggressive discounting strategy is as much about survival as it is about conquest. By flooding the market with lower prices, they're hoping to revive sales volumes, rebuild dealer confidence, and re-establish themselves as a household name in the American auto scene. But will it work long-term? And what happens if the other automakers fight back with discounts of their own? We've seen this before, temporary sales spikes that led to long-term pricing instability. Automakers might move more cars, but profit margins will shrink and dealer networks could take a hit. The stakes are high, and the entire industry is watching Nissan's next move very, very closely. And while Nissan customers are celebrating today, the looming question is, how far will this go? Some analysts are warning that this is just the beginning. If Nissan keeps slashing prices to move metal, other automakers might not have a choice but to follow, triggering a chain reaction that could collapse pricing models across the board. Ford, GM, Honda, and Toyota have been reluctant to join the discount race, but pressure is mounting fast. Dealers are already reporting walkouts, buyers showing interest in a vehicle, then checking their phones and discovering a similar Nissan model for thousands less, with better financing and faster delivery. And they're gone. Just like that. This is hitting used car dealers hard, too. Vehicles that were commanding inflated prices just a few months ago are now sitting idle, as buyers opt for brand new Nissans with full warranties and little to no price difference. The depreciation curve is shifting in real time. Resale values are being recalculated across the board, especially for older sedans and SUVs that now have direct competition from new models priced nearly the same. Even rental car companies are stepping in, taking advantage of Nissan's fleet discounts to restock aging vehicles at a fraction of the usual cost. That's another blow to retail sales for rivals. If this trend continues, we could see a flood of low-mileage vehicles re-entering the market in the next 12 to 18 months, further destabilizing used prices and forcing automakers to rethink their entire pricing strategy from the factory floor to the dealership lot. And don't underestimate how this is affecting Wall Street. Nissan stock saw a modest bump after the announcement, but more telling was the immediate dip in shares for competitors. Investors are nervous. They know that if a price war breaks out, it could wreak havoc on quarterly earnings for every automaker, especially those who rely heavily on high-margin SUV and truck sales. Nissan, in contrast, has fewer premium models to protect, giving it more flexibility to go aggressive without sacrificing core profitability. There's also growing speculation about who really pulled the strings here. Sources close to Nissan's U.S. operations suggest that this wasn't just a regional decision. It came from the top, driven by executives in Japan who saw a rare opportunity to seize control of a sluggish North American market. With U.S. consumer sentiment wavering, interest rates expected to stay elevated, and leasing volumes still far below pre-pandemic levels, they saw an opening. And they took it. What's especially fascinating is how this is reshaping customer expectations. People aren't just excited about deals, they're starting to expect them. If you bought a Nissan last month without these discounts, you're probably furious right now. And if you're shopping today, you're asking yourself, why would I pay full price for a Toyota or Honda when I can get a comparable Nissan for way less with better financing? That mindset shift is dangerous for the rest of the industry, and exactly what Nissan is betting on. And yet, underneath all of this buzz is a critical question. How sustainable is this approach? Deep discounts might work short-term, but they can't prop up a brand forever. If Nissan fails to convert this momentum into long-term loyalty and customer retention, the gains may evaporate just as fast as they arrived. The risk is real. Once you train the market to expect lower prices, it's nearly impossible to walk them back without backlash. Still, for now, the gamble is paying off. Dealerships are moving units at a pace they haven't seen since pre-COVID days. Factory pipelines are clearing. Foot traffic is up. Digital leads are through the roof. Nissan's brand visibility, something they've struggled with for years, is suddenly front and center again in consumer conversations. People are talking about Nissan not just because of a flashy ad or a Super Bowl spot, but because the deals feel too good to ignore. And this momentum is spreading fast. In key markets like Texas, Florida, and California, where mid-size SUVs dominate sales charts, Nissan is starting to post serious gains. Some dealerships have reported weekend sales spikes of over 200%. That's not just a rebound, that's a market invasion. And if this trend holds through the next quarter, Nissan might just rewrite the playbook for every other automaker in America. But the industry isn't taking this lying down. Behind the scenes, other automakers are already preparing countermeasures. Several sources within dealership networks have leaked internal memos hinting at incoming emergency incentive packages from Toyota, Hyundai, and even Ford. These packages could include revised lease terms, flash rebates, and low APR financing, moves that mirror Nissan's aggressive strategy. But here's the problem. Many of these brands aren't positioned as value leaders. Toyota banks on reliability, Honda on refinement, and Ford on American muscle. Slashing prices risks undercutting their brand image, and that's a gamble not all of them are willing to make. Still, if Nissan continues to bleed market share from its rivals, they may have no choice. We could be days away from a pricing domino effect. Dealerships are already whispering about secret stock evaluations, as manufacturers assess how much unsold inventory they can realistically afford to discount without sending shockwaves through their own supply chains. The whispers are turning into meetings. The meetings are turning into strategies. And if those strategies become action, Nissan's Bombshell won't just be a one-off. It'll be the spark that lights an industry-wide fire. Meanwhile, customers are sensing the urgency. Social media is flooded with TikToks and Instagram reels of buyers showing off their new Nissan deals. YouTube influencers are racing to review these newly discounted models, comparing them against rival brands in real time. Reddit threads are filled with first-time Nissan buyers saying things like, "I never thought I'd get a Nissan, but the price was unbeatable." That kind of grassroots momentum is hard to buy and even harder to fake. It's organic, it's real, and it's driving a surge in both showroom visits and online inquiries. But behind the excitement, tension is building. Dealerships are starting to face logistical bottlenecks. Transport trucks can't keep up. Some high-volume Nissan dealerships are reporting waitlists for incoming discounted models. Others are begging corporate for more units, especially of the Rogue, Sentra, and Kicks. Even the Frontier pickup, long overshadowed by the Tacoma in Colorado, is getting renewed attention from price-sensitive truck buyers looking for a deal. It's chaos, but it's the kind of chaos Nissan needs to claw its way back to the top of the U.S. sales charts. And it's not just domestic automakers feeling the squeeze. European and Korean brands are being hit too. Volkswagen and Mazda dealerships, already struggling with tight margins and slower than expected EV rollouts, are seeing their leads dry up almost overnight. Customers who were about to sign paperwork for a Tiguan or a CX-5 are now second-guessing their decisions. Nissan's massive pricing play is pulling buyers from every segment and every competitor. No one is safe, but there's a darker undercurrent to all this. Automotive insiders are warning that this kind of unsustainable discounting could lead to long-term brand dilution. If Nissan becomes synonymous with bargain bin pricing, what happens to its premium aspirations? Models like the Maxima and Murano, once considered near-luxury offerings, could lose their perceived value. If buyers expect every Nissan to come with a heavy discount, it becomes harder to command full price even when the market recovers. At the same time, automakers are watching how banks and lenders respond. Will financing partners continue to offer attractive terms if they believe vehicle values are being undermined? Could this discount war lead to higher risk premiums, tighter lending standards, and ultimately fewer qualified buyers? The financial ecosystem that supports the auto market is delicate, and Nissan's bold play is putting serious pressure on the gears that keep it all turning. Yet, despite all the risks, the results are hard to ignore. Nissan is back in the conversation, back in the game, and suddenly, the rest of the industry is reacting to them, not the other way around. In a market where attention spans are short and brand loyalty is fragile, that kind of momentum is everything. And as we move deeper into the third quarter, all eyes are on what Nissan will do next. Will Nissan double down on these massive incentives? Or will they pivot, using this surge in sales to reset their pricing structure and stabilize margins? Insiders suggest the company may already be working on phase 2 of its strategy: targeted regional discounts, bundled technology upgrades, and limited-time loyalty offers designed to lock buyers into the Nissan ecosystem for the long haul. If that's true, then what we've seen so far is just the opening salvo. There are also whispers that Nissan is about to push even harder into the fleet and rideshare segments. With Uber and Lyft drivers desperately looking for affordable, fuel-efficient vehicles, and traditional fleet buyers like rental car companies still rebuilding post-pandemic, Nissan could strike deals that move thousands of units in bulk. That would instantly boost production demand, keep factories humming, and maintain their momentum even as retail consumer sales normalize. Meanwhile, competitors are scrambling not only to match discounts, but to explain them. Brands like Toyota and Honda have built their reputations around premium value, long-term reliability, and pricing stability. If they suddenly start offering huge markdowns, it sends a signal to buyers that prices were inflated all along. That's a dangerous perception. They risk breaking trust with loyal customers, many of whom paid top dollar just months ago. Nissan, on the other hand, has nothing to lose. They've embraced the value warrior role, and they're playing it masterfully. But this aggressive strategy isn't without serious long-term risks. Dealerships are already bracing for the financial impact. With lower profit margins on each vehicle sold, the pressure shifts to upselling service plans, accessories, and financing packages just to stay afloat. Some smaller dealers, especially those in rural or lower volume markets, are warning that if these deep discounts become the new norm, they won't be able to survive. Inventory turnover is up, yes, but profits per vehicle are shrinking fast, and that's not sustainable. Still, the wave hasn't crested yet. Nissan has now hinted at expanding these deals across more of its lineup. The Pathfinder, Armada, and even the all-electric Leaf may soon see aggressive pricing moves, potentially putting even more pressure on competitors like Ford's Explorer, Hyundai's Palisade, and Chevrolet's Bolt. The message is clear: no segment is safe, no price point is sacred, and Nissan is playing for dominance, not just survival. This bombshell is also forcing a reckoning within the luxury segment. Infiniti, Nissan's luxury arm, has remained mostly quiet, but that might change soon. If Nissan's parent company decides to extend this strategy upward, we could witness something truly unprecedented: a luxury brand entering the discount war. Imagine seeing an Infiniti QX60 offered at a price comparable to a base model Toyota Highlander. That would send shockwaves up the entire luxury ladder, from Lexus to BMW. For consumers, it's a strange but thrilling moment. The power dynamic has shifted. After years of dealer markups, long wait lists, and overpriced trims, buyers are suddenly in control again. Negotiations that once felt one-sided are now being driven by urgency from the seller's side. It's no longer take it or leave it. Now it's please take it before the next buyer does. And as this story continues to unfold, the question becomes, is this the future of car buying in America? If Nissan's bold discount strategy proves successful, if it continues driving record foot traffic, clearing out bloated inventories, and capturing market share, then yes, this could be the new reality. A future where value once again outweighs vanity, where buyers don't need to mortgage their future for basic transportation, where aggressive pricing is no longer a desperate act, but a deliberate strategy to win loyalty and reshape the market. But that future hinges on what comes next. Will Nissan be able to sustain these offers without sacrificing long-term brand equity? Can they convert these deal hunters into repeat customers? And will their competitors fight back or fold under pressure? That's the high-stakes game unfolding right now across factory floors, boardrooms, and dealership lots nationwide. What's certain is this: Nissan has flipped the script. They've gone from being a fading name in a crowded market to the catalyst of a full-blown industry disruption. They've reminded us that in a market dominated by tech-laden trucks and luxury trims, sometimes the most powerful move is simply making cars people can actually afford. So, if you're in the market for a new car, pay attention, because the rules are changing fast. Nissan just declared a pricing war, and whether you're a buyer or a brand, nothing about the U.S. auto industry will ever be the same again. Stay tuned, because this story is still accelerating.